Hi guys, it's Thomas here from COTbase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 20th COT report of this year, and as usual we're going to start off with the changes in commercials positions. Here we go. Australian dollars are our first market. We have a 32% change in commercials and 28% in large speculators. You may see these changes on the chart. We had similar changes last week, and you can see that the market reacted pretty well to that change signal. What's interesting to see also is both commercials and large speculators are currently net long in this market, and it's just small speculators who are pessimistic right now. Of course, that in itself can be considered a bullish signal, but let's open the 5 years chart and see what the extreme situation shows us. You may see that we have reached a relative bullish extreme. The previous one back over here, early 2017 this year, was an effective signal. After that, you can see prices have gone higher. Of course, it's not so easy to tell whether this is an extreme, but judging by last week's price movement, this may actually be one of those situations. You can see that we're a bit far away from those all-time extreme levels in case of commercials, of course also in case of large speculators, but still it's an extreme that can be effective. Our next market is lumber. We have a 31% change over there in commercials positions. Here we go. This actually is possibly the largest change, or maybe the second, third largest change in the past 52 weeks time range. It's of course a bullish COT change signal, and of course coming at a point in time when this may actually be a good opportunity to go long. Of course, you may have to be a little bit careful because there's pretty strong dynamics in this decline that we had in lumber. Opening this 5 year chart, you can see that we're moving away from bearish COT extreme levels. You can see that that level was maybe not the last bearish COT extreme may have came a little bit early, but eventually it took effect, and you can see there has been a bit of a decline in this market. You may see that we're more or less in between the two extremes right now. So it's basically this change signal that could affect prices. Our next market is rough rice with a 26% change in commercials, a much larger 40% change in large speculators positions. This is of course a bearish COT change signal, and you may see that we had an increase in prices last week, so this change signal may actually be coming in a good time. 5 years chart, you can see that we are moving away from a bearish COT extreme, but now with this change, of course, we've again gone closer to the bearish extreme part of the market. I would say it's mainly the change signal this week that should be taken into consideration. The extreme is not that helpful, I would say. Or you could also state that the last extreme is still in place, which was bearish, but then you may also see that that level has been broken. So I would say forget about that. That bearish extreme signal was not effective, or maybe was for only a short period of time, 2 weeks possibly, but eventually prices have skyrocketed from there, and because of the dynamics, I would be very cautious with any interpretation of this report right now. It's the change signal that may push prices a bit lower in the next couple of days, but you might want to look at other markets. Let's jump to the large speculator COT extreme, and let's start with the natural gas. Here we go. 5 years chart, you may see that we have a humongous all-time COT extreme signal in this market. So of course this means that well, you could read it. Basically, commercials, producers, and users of natural gas are heavily short. There are almost 100,000 contracts net short currently, and this is basically historically the largest net short positions they ever had. On the other hand, large speculators have never had such a long position in this market, which is again very significant. So of course timing is always the big question here, but stress levels have reached an all-time high, and I think that's something you shouldn't neglect. Let's move on and have a look at the Canadian dollar. Still all-time extreme over here. We talked about it last week. Let's jump to the 5-year chart. So here we go. Well, I think it's a pretty obvious picture. The report tells us that prices should be going higher from here. And as you may see from last week, maybe we have reached a bottom. But nevertheless, I think it's quite obvious that we have a huge stress in this market as well. And of course, it's pointing upwards. And last but not least, let's have a look at the euro with 163 reported extreme in large speculators, 184 in commercials. Basically, that means that a few weeks ago, we've again changed positions. Large speculators have become net long and commercials became net short. So this is, of course, a bearish COT extreme signal. And maybe it's coming at a point in time when you may be seeing some good stop levels coming at these resistance levels not far. So that is going to be all for this review. Don't forget you can look at other COT charts and of course do a more in-depth and detailed COT analysis if you wish on this page. I hope you enjoyed it. I hope to see you next week. Have a great weekend. Take care. Goodbye.